Let's kick off this morning in Asia, in Singapore, with Toby Copson, managing partner at Davenport Energy. Toby, have we now seen the peak oil price from this crisis, US war on Iran crisis yesterday? I think Brent intraday peaked up to 119. Is that now behind us? The peak oil price from this crisis is in the rearview mirror.
Well, I mean, short term, yes, it's in the rear view mirror, but going forward, we could very easily see that again, because the market is trading 50% on fundamentals and 50% on headlines and tweets. And there could be a revelation in the next hour or so, or later in the day, where we see a spike. Look, we had a huge retracement overnight, and now it's slowly starting to tick up. So it's suggesting that people are scaling into longs again on the back of some of this, geopolitical saber rattling.
The market opened yesterday, Toby, with that steep spike up. What was it that happened over the weekend that drove it into that sort of very concerned outlook for supply that has now retreated? I mean, Friday the close was not so. I mean, it was up, but it wasn't in sort of red lights flashing mode. Something transpired over the weekend to wake up traders on Monday morning.
Well, I think it was various different pieces of news, but they were all supply based. We're seeing a number of shut-ins, zero flow through the strait, and the market was pricing in this logistical problem, and people were taking long positions to capitalize on it. And of course we did. We opened up massively, and just as quickly we retraced. So I mean, volatility is at an extreme point at the moment, and it's quite frustrating and difficult to manage your positions when you know what the fundamentals look like, potentially where the price, the real fair value should be, but one tweet, one headline, and the market, to be honest with you, I think the market was looking for an excuse to start trimming positions and take a bit of profit off the table.
Toby, we were seeing already sort of the impact of some of the, obviously many impacts everywhere, but the Asian demand pulling both LNG and products away from Europe, perhaps outbidding Europe to bring in some of the LNG that they need, some of the fuel, jet fuel, diesel. Give us your thoughts on where the sort of flows, the redirection of flows during this crisis that is obviously not abating.
Well, I tend to agree with the other chaps. There's sufficient supplies for nobody really to panic, especially when it comes to China, Korea, Japan. They're in a slightly different scenario. It's the product market where the problems are emerging, and you're seeing that with the blowout on the spreads in Kero and fuel oil. So, from a crude perspective, there's a lot on water that can alleviate some of the current restrictions coming out the
I mean,
Gulf.
crude seems to be the least of the stress spaces, right? I mean, in terms of the LNG spot price is doubled. You've got China not exporting diesel and gasoline. I mean, it seems that there's other places that we've seen cargo, the freight rates quadrupled. I mean, the stress is in other places than the front month of oil.
Right, exactly. And going to LNG for a moment, that arb has now opened up with a premium into Asia. So the marginal stuff is now getting rerouted into the Asian markets. Southeast Asia at current levels have been priced out almost entirely. So you're going to see the larger players like Japan and South Korea snap those up. And there's, over and above that marginal barrel, there's not so much available that they can pivot to. There's a couple of US liquefaction plants that might have a little bit of spare capacity. But over and above that, it's contractual volumes. China also, let's not forget, has the Power of Siberia 1 pipeline, which they can draw from as well. So from a pressure point of view, I certainly think, including the rhetoric coming out of Europe about no longer taking on, Russian product, and Putin recently saying that we're not going to wait for them to slam the door in our face. We're going to, cut them off uh, first. So I think at the moment it's certainly a product story, and it's going to start hurting the airlines and the hedgers very quickly as these spreads continue to blow out.
We did see data out of China today, continuing to import significant amounts of oil over January and February as the price climbed. That sort of build inventory, buy for inventory in China, that play seems to be maintained at the moment through this first quarter.
Yeah, I mean, it's opportunistic buying, and they've been doing that since Q4 last year, with various different origins. So if there was an opportunity to take discounted barrels, they elected to do so, and they've managed to build a very big surplus in their SPR. Some of the SOEs also are selling into the market, and why wouldn't you? It's when you see this sort of numbers, you do sell into strength, especially when you have energy security, which they do.
Looking forward on this and through the sort of trading headlines, we saw during the sort of the Ukraine conflict, the Russia's invasion of Ukraine in 22 and thereafter, it was a bonanza. Oil traders never made more money than they made in the subsequent period. Is this another all your Christmases together for the traders?
If you're a volatility trader, you could probably close your book after this. So, some people are not trading volatility. Some are just taking a directional view, and that's fine too. Longs from last night, some of them could be trading flat, some of them could very well be underwater. But I think the market is pricing in the potential another spike. As you can see right now, it's gradually starting to tick up from the lows. So that would suggest again that people are starting to scale into positions and potentially waiting for a new headline. Perhaps a new tanker gets struck in the strait. Perhaps the IRGC makes a bold statement, or Trump counters that statement. So for the time being, I must admit, I do enjoy the volatility, but it's exhausting.
Last word to you on this. I mean, the crisis
Yeah.
is over when it's over. Ultimately, seeing through the narrative here,
Yeah.
that all the forecasts earlier in the year for the year ahead, including the world's biggest independent oil trader, Vitol, were forecasting a sub 60 on Brent, maybe even lower. Do we return to that sort of trend line after this has passed?
I mean, does it mean revert or not? It's hard to say, especially with how things are going in the Strait. I mean, like it's a logistical issue at the moment, and it will become a supply issue when we get to the fact that there's shut-ins and there's lead times to do that. And just to one other point, when you start looking at, Korea putting price caps in, well, that's not ideal either, because if there's no subsidization with those price cap, then that falls solely on the refiners. So perhaps in a bear case scenario, that they scale back their demand, and perhaps we do see those numbers again. But right now we're trading in an environment where it's hourly to every minute. So we have to reassess and revise, and I can't make blanket statements like that for the time being.